What is going on, investors? Hopefully, you guys had a great day out there. Time to talk about Cisco Systems, ticker symbol CSCO. This company's up pretty big over the last year, up 33%. I was looking at the stock chart and I was like, wow, this looks like Microsoft, Google, Facebook. This thing has been ripping. It was a $35 stock, and now we're sitting up here at $54 per share. Let's talk about what this means from a technical perspective. We're actually pulling back onto this trend line for really only the fourth time over the last several months, really since dating back till November of last year. So almost a year. We're now on this line. I'll talk about what that means from a technical perspective if you happen to own or potentially want to own Cisco shares. Now, all things being considered, the quarter just came in. This was their fiscal year, so we get a full year view when we get over to these financials as well. Now, all things being considered, things looking pretty good. Now, for the full year, and this is the upcoming, they see their revenues growing 5 to 7%. It was actually expected to be 4.4%. So one thing you got to think about with Cisco, it's not your high growth NVIDIA or Facebook or Microsoft, but I tell you what, the stock has been reacting like it. But you do get 2.64% on this dividend yield. That's good for about $1.48 per share. They tend to bump these things up over the course of the year as well. You also are not paying a massive amount for this company in terms of valuation. You got a 17.45 times forward PE on this one, and you got a $236 billion market cap on it. I just did a video on NVIDIA. That's about $200 billion less than NVIDIA. And they've got far more impressive revenues over here at Cisco, but they are not growing those revenues nearly as fast as NVIDIA. We'll talk about that here in a second. Now, I'm not comparing the two. I'm just saying I just did a video on NVIDIA, and that stock's been ripping, to say the least. Now, we've got the revenue here on the product side. That is for Cisco. We've got our 3 months ended here, year over a year. Our left-hand column is our most recent quarter, and this was a great quarter. Take a look at this. Year over year on this product side went from 8.8 up to $9.7 billion. That's nearly $1 billion, really closer to $900 million of growth on that product side. Take a look for the full year. 35.97 for all intents and purposes. That is 36 billion, and we ended the year at 36 billion. So basically flat year over year on that revenue side, on that product side, but you bolted on a ton of it in this most recent quarter. So it may be something about the Q4 for Cisco. That is a big buying quarter for their clients. Now, in terms of service, basically flat, up marginally or fractionally for the full year as well. On the full year, we went from 49.3 billion up to 49.8, but this was an impressive quarter. You went from 12.154 billion this time last year all the way up $1 billion basically to 13.126, just south of $1 billion. Now, in terms of what I want to do is when you have these companies that aren't having electric growth, okay, this is not electric growth, even on a quarter over quarter basis where we grew these, I think about 8%, year over year, we're essentially flat. So what you want to see when you're looking at these types of companies is they don't check that box of revenue growth. So if you don't have that strong revenue growth, I probably want a dividend, okay? And this company does check that box, and I want to pay a reasonable valuation. And at 17 times forward earnings, look, compared to the rest of the market, that's pretty cheap. Whether or not that's historically cheap for Cisco, I'll let you decide on that as well. Now, what you want to see is that they're keeping cost in check, okay? Because when you're not growing your revenue super fast, you better keep your expenses in check, okay? And these are our cost of sales. So you'd like to see them drive margin in terms of gross margin, or you'd like to see these operating expenses basically stay flat or go down, in my opinion. Now, total cost of sales went from 4.47 up to 4.782. For the full year, we went from 17.6 up to about 17.9, so only about $300 million worth of cost. That's phenomenal, okay? Over in terms of total revenue being at a 49 billion, nearly $50 billion to only grow your total cost of sales by about $310 million. That's absolutely fantastic. That gives us gross margin essentially flat from a rounding perspective year over year at about $31.9 billion. The most recent quarter, we actually saw that expand a little bit, primarily due to the fact that we grew revenues very nicely. Now, that's not the full story. We got other costs, R&D, selling and marketing, general and administrative. You would particularly like to see these costs stay relatively flat because that is what our revenues are doing. And you're seeing that. So our total cost went from $4.4 billion last quarter up to about $4.77 billion. For the full year, you went from $18 billion up to about $19 billion. Now, so we had a little bit of slippage here in terms of our operating costs. Looks like they spent a little bit more on research and development and a little bit more on general and administrative. They had some restructuring charges as well that impacted the operating income side as well. Here's our operating income. Over the last year, on a quarterly basis, you went from $3.2 billion up to about $3.6 billion. Over the last fiscal year, so the last 12 months, over 12 months, you went from 13.6 down, yes, down to $12.8 billion. And on the net income side, a lot of this is flowing through. They do pay some income taxes. They have some interest expense or a benefit in this case. And so all things being considered, things are looking pretty good. This is your steady tech company that looks really good from a dividend perspective, from a valuation perspective, not nearly as good from a revenue growth perspective. From a balance sheet perspective, things are looking really, really fine over here. You got plenty of cash on the balance sheet. You do have some short-term debt. You have some long-term debt, but they could take on more if they needed to, okay? You got long-term debt here at $9 billion. You got a little bit on short-term at 2.5, but you've got $24 billion just in stone cold cash. You got another 5.7 in receivables. You got some other finance receivables. I mean, they got plenty of cash here. If they wanted to do an acquisition, if they wanted to really bolster up R&D or do something, they could certainly do that. Now, from a cash flow perspective, look at this steadiness, okay? You went from last year, $15.4 billion up to, or really just flat, up just marginally to $15.4 billion. All things being considered, just looking absolutely phenomenal. You got your dividends here. You got repayments of debt. You got repurchase of common stock. So you're getting a buyback. You're getting a dividend. You get steady, really steady growth with this one. And I tell you what, if you pick this stock up a few months ago or last year in the low 30s, $40 per share, you've gotten price appreciation as well. This thing's been on a monster run up here to about $54 per share. Now, I am seeing that this has broken below our trend line now, okay? This stock's down about 3% in the after hours. I'll put a big old line in here just in case you're on a phone or something and you can't really see this very well. We're sitting right at about $54 per share on this one in the after hours. We were up here closer to $55 per share. And you might say, well, $1, it's not that big of a deal. Well, from a technical perspective, yeah, because we drew this line in here. And look, you can draw these lines in here any way you want. I don't really know. I tell you what you look for, though, is on an uptrend, a low here, higher lows, kind of broke it here, but then you reestablish that and you higher lows, all the way up. So if we break below, there's some support here for the stock right at $52. That's about $2 lower than where the stock is trading right now in the after hours at $54 per share. Tell you what, if you wanted to add to this one, wouldn't absolutely be falling in love like walking on the beach with that price, but there is, it's not that bad, okay? 52. Yes, we'll have broken trend, okay? But you got to expect with a company that is not growing their revenues as fast as like a Facebook or, the major tech companies, you got to expect that this uptrend is going to stall out at some point and this stock is going to trade sideways. In that period of time, you could accumulate, get those dividends starting to reinvest, and have yourself a nice little solid investment, in my opinion. Now, would I build my portfolio around Cisco? No. I think especially, and it depends on your age, depends on your risk, depends on your time horizon, all those types of things, all those good stuff. But if you're my age, 40 years old or younger, I think you're looking for a little bit higher growth, but in a dividend portfolio where you want to have, you're invested in some mega cap tech. You're invested in a little, sprinkle in just a small amount of speculative stuff, maybe 1%, 2% of the portfolio. Maybe you got a little bit of crypto. But you should have some dividend stocks, some dividend growth stocks, some consistent winners, and Cisco fits that bill. So if you're looking for a stock to fit into that type of investment, I think it got some opportunities here. Wouldn't love 54, but it could be just a temporary break of trend. I think if we break trend on this one, we're coming down to $52 per share. That would be an interesting entry point. You've also got levels down there, really $1 all the way down to about really the rock bottom on this one would be about $48 per share. That's where you'd see me get really excited because that was our previous areas of resistance back here. And once we broke above 48, it ran all the way up to $56 per share on this one. So I like Cisco. I like what they got going on. Just understand the type of investment that it is. They've got some money on the balance sheet. They could leverage it up a little bit if they wanted to. It'll be interesting to see if that's something they decide to do in the coming year. That was Cisco. Hopefully you guys enjoyed that video. We'll be back again soon with more. Good luck with your investments.